We'll let you go at that, Subranil. Thank you so much for joining us with your sense on how you should be trading those commodities. So range-bound trend is what is expected for the Chana prices. But let's get in a regulatory voice as well. And joining us now is Jayant Nalawade, who's Chief Compliance Officer at NCDEX. And he joins us on a Mumbai phone line as well. Jayant, hi, good to see you. What's your sense really coming in on all the news that is doing rounds? First of all, let's start with the margin hike, 25% on the buying side. I mean, did you really see prices excessively higher to be putting that?
It's not about the prices, it's more about the exuberance in the market. So exchange does not necessarily target prices, but there was a sense of exuberance in the market. People, we felt it was not justified. So typically exchange takes regulatory action when it sees excessive exuberance or irrational exuberance, as is known in financial markets.
Jan, there have been some issues about, or rather concerns about the delivery on pulses also, especially in Delhi. I mean, that is where the stock limit is still on, and there are lots of the people, I mean, the traders for that matters have approached the ministry also. How is NCDEX dealing with all of that?
We have taken that up with the Delhi administration. We have requested, because there was some issue of registration of the approved warehouses of the exchange, which are located within the NCR. So as of now, there is no licensing authority for warehouses in the Delhi NCR region. So we had taken up that with the Delhi government, requesting them to basically, because the WDRA will not register warehouses which do not have licenses. So that is the issue that we have taken up with the Delhi government. Let's see how it develops.
You know, Jayant, a lot of people also are saying, traders are saying that this is a very critical time, because this is a time when FMC and SEBI merger is going to take place in less than a fortnight, and an issue coming in at this point in time perhaps is not very timely.
But, we have moved in this area earlier, and so we have approved warehouses in Sonipat, which is less than 50 kilometers from the Delhi region. So deliveries can happen from Sonipat, which has a good warehousing infrastructure. So as far as deliveries on the exchange is concerned, we have taken adequate steps, we feel. And in July and August, we have seen almost 150,000 tons being delivered on the exchange platform. So as of now, there are no issues for deliveries is concerned. Warehousing concern, regarding warehouses located in Delhi, that is something that the Delhi administration has to look at. So we have already requested them to basically help us so that these warehouses could get registered with the WDRA, which is necessary for the approved warehouses of the exchange.
One final question, Jayant, and the spot and the future rates have been varying a lot. I mean, we haven't seen that much of a volatility coming in case of the spot prices as the future has been moving. On the convergence, do you think the steps taken by the exchange would help that?
Yes, we believe so. Although all the futures contracts are at the backwardation to the spot prices, so all the contracts which are trading on the exchange are lower than the spot prices. So there is some. It looks like the demand in the spot market is higher than the supply. So we are seeing spot prices a little higher. But as in other pulses, we have seen that the prices in the spot markets have tempered a little in last week or so. So Chana also has come down by, in the spot market, come down by over 200 rupees during the last 1 week. So futures prices are reflecting the likelihood, essentially what the market expects. So that is the situation right now.
All right, Jan, we'll let you go at that. Thank you so much for explaining that thing to us. So that's the view coming in from NCDEX, the exchange, of course, that they have increased margins on pulses trading by 25%. The commodity has been quite volatile. There have been concerns about delivery as well. But remember, the pulses as a commodity has gained 36% month on month, as has been shown in the inflation data. It has been the 8th straight month when pulses have jumped up on a double digit in sense of inflation there. So those are, of course, some concerns coming in with the exchange came out and sorted on the channel. With that, completely out of time on the show. Thank you for watching.